Weak consumer sentiment and economic data spark a sell-off on Wall Street on Friday. The tech stocks are the worst hit as the Nasdaq corrects over 2% to record its worst weekly performance since last November. The Dow Jones and the S&P 500 also slip over 1%. Most Asian markets have opened with cuts as well after a weak handover from Wall Street. The GIFT Nifty is also indicating a gap down start for our own markets. Gold prices have eased from record levels on Friday, but gained for the 8th week in a row as trade and economic uncertainties persist. Brent corrects over 2.5% on easing geopolitical tensions in West Asia and between Russia and the US. Food inflation pressures are turning decisively positive, according to the new RBI Governor Sanjay Malhotra at his first monetary policy meeting, according to the minutes released by the Reserve Bank of India, adding that high growth momentum must be preserved while maintaining price stability. The RBI has also announced a $10 billion forex swap in a bid to ease the liquidity crunch. The auction will be held on the 28th of February. And the NSE has announced key changes to the Nifty 50. Zomato and Jio Financial Services will enter the index from the 28th of March at the expense of BPCL and Britannia. The FTSE Global Equity Index changes also come into effect, with 14 new stocks have been included, with some adjustments taking place on the 21st of March. It is the start of a brand new week and a truncated one, more importantly. Hello and welcome. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I am Horus Patakia. Let's first take a look at how the Asian markets are faring. The Japanese markets are shut today, but the ones that are open have opened mostly on a flat to negative note. The Hang Seng continues to trade above the flat line. Remember, it's been a big outperformer over the last few months, especially in the start of 2025. The Taiwanese index is down almost 1%, as is the Kospi in South Korea, trading with losses of a similar quantum, around about 0.8%. So it's a red screen predominantly across Asia. That comes on the back of a weak handover from Wall Street. But before we get to that, let's pull up the GIFT Nifty, and that too is indicating a gap down start for our own markets. Remember, it was a weekly loss last week for the Nifty, and the pressure is likely to continue today. 150 points down is what the implied open currently suggesting for our own markets. But this red on the screen comes on the back of an extremely weak session that we saw on Wall Street last Friday. It was the worst day for the benchmark indices in 2025 so far. The Dow Jones fell almost 750 points. The S&P 500 and the Nasdaq almost fell almost more than 2%. The Dow finished the week 2.5% lower. It was the worst weekly performance since October. The S&P 500 also slipping almost 1.75%. The Nasdaq fell 2.5% for the week. And the slide came amidst renewed concerns about economic growth in the US. Now, Fed officials have made it clear that the monetary policy is on hold until inflation comes down. CNBC's Steve Leisman is here to get us all the details.
More and more Fed officials are placing the unknowns about fiscal policy on equal footing with inflation in explaining why monetary policy is on hold and will remain there until policies become clear. Fed Governor Adriana Kugler echoed the sentiment of several Fed officials when she said the potential net effect of new economic policies also remains highly uncertain and will depend on the breadth, duration, reactions to, and importantly, specifics of the measures adopted. The effects of uncertainty haven't shown up in any of the hard U.S. economic data, but it is tracked in several indices. The Economic Policy Uncertainty Index looks at newspaper articles, differences in economic forecasts, and tax code changes. It shot up after the election, came back down, and is now the highest it's been since the pandemic. In fact, it's higher than at any time during the Biden or first Trump administrations outside of the pandemic, and it's 60% of that elevated pandemic level. The Trade Policy Uncertainty Index has never been higher, far surpassing the levels from when President Trump put tariffs in place in 2018. Stanford economics professor Stephen Davis, who created the Economic Policy Uncertainty Index, tells me uncertainty tends to dampen economic activity regardless of whether the prospective policy change is good or bad for efficiency and profitability. Of course, the good versus bad aspects of policy changes also matter. Davis says uncertainty can make businesses wait to hire or invest. Sectors relying on government spending or regulation are most sensitive to that uncertainty. The paradox for investors and for the Fed: these high levels of uncertainty also come with elevated levels of business optimism, raising the uncertainty over which will win out when it comes to the economy.
Growth and economic uncertainty weighing on Wall Street. Let us now listen into expert opinions on the state of the economy, the inflation concerns, and the impact of the Fed's interest rate decision, and a lot more.
I guess I'm concerned about the inflation progress. I think it has stalled. I think it, long term, it's going to probably move back down. But I think the Fed's right in being cautious here and not, wanting to keep moving the interest rates down as they had planned to do. So I think they're right to be cautious. We'll have to see. We saw a similar kind of stall out at the beginning of last year, and the Fed was concerned about it. And then later on in the year, it did move back down again. So it could be seasonality. It could be concerns about tariffs. It could be a lot of things that are affecting the inflation numbers. We'll just kind of have to wait and see. But I do think the Fed's right in terms of there's no compelling reason, even if you put aside fiscal policy, there's really no compelling reason right now to be moving rates down.
Important part is the trade policy. And are we going to see some more tit for tat on these tariffs or threats of tariff? We are. You'd hope that in the end, tariff barriers all the way around the globe would be lowered. Now, that'd take some time to play out. And I think that the president certainly, and we all know this, he's using tariffs as a negotiating tool. But certainly, I don't think he's going to hesitate, let's say, at the end of this month here in the next few weeks, if he doesn't feel like Canada and Mexico are doing the things that the U.S. would like to see them do. We're going to see some tariffs implemented there. I think that, of course, the goal of these tariffs, and just like the last administration, is to help the manufacturing sector here at home, which I think everybody would agree has really deteriorated over the last 30, 40 years.
So all the global market action on a very weak one at that. And how will all of this overnight Friday action impact the Indian markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Vivek joins in to get all the market cues we need to watch out for. Vivek, good morning. A gap down start in the offing, but what else is on your radar today?
Good morning, Hormaz. You're absolutely right. It's a clear risk of sentiment as far as equities, commodities were concerned last week. And this week, so far, what we've seen from Asian markets and also the GIFT Nifty indicates that we could see continued selling pressure. Quickly wrapping through, what exactly transpired as far as Wall Street was concerned. All U.S. indices ended with cuts on Friday. And remember, this capped off what was essentially a losing streak or a losing week as far as Wall Street was concerned. Now, interestingly, oil prices also cooled off quite significantly. Brent futures fell almost 2.7% on Friday, now hovering around the $74.4 a barrel mark. Now, coming to the Indian markets and what exactly transpired as far as both last week as well as on Friday was concerned. Last week, second straight weekly fall, all of the indices ended with cuts. Metals and power were the top sectoral gainers. Remember, utilities did quite well in the week gone by. But what essentially saw significant cuts on the back of tariff worries, on the back of increased competition. Tariff worries impacted pharma, and increased competition impacted the entire auto sector. On Friday, the Nifty FMCG index continued its decline for the 15th straight session, and the auto index ended up as the worst performing index. Asian markets, GIFT Nifty, all of them indicating a gap down start for our own markets today.
15 days of losses for the FMCG index, the consumption rally fizzling out. Vivek, thanks a lot for that. We'll keep an eye out on this gap down start and whether or not on a closing basis we do manage to defend those 22,800 levels on the Nifty. But some important stocks that should be on your radar today. Start off with some index changes that were announced on Friday evening, and on expected lines, Zomato and Jio Financial Services will now become a part of the Nifty 50 from the 28th of March. That was the big announcement, and that will come at the expense of BPCL and Britannia. That will be excluded from this 50 stock benchmark index. Of course, the FTSE changes were also announced. Almost 14 names will be included, but some important names that come up are BSE, CDSL, Bajaj Housing Finance, IndusInd Bank, and along a lot of other names as well. Some other important stocks that should be on our radar today: Healthcare Global. Now, that is a confirmation of a CNBC TV18 news break. KKR is going to acquire a controlling stake from CVC at $400 million. An open offer has been triggered as well, but the stake will be acquired at 445 rupees a share, which is a discount to Healthcare Global's closing price on Friday, which is around 500 rupees. And the founder of Healthcare Global, B.S. Ajay Kumar, will become non-executive chairman of the company. Now, CNBC TV18 had first reported on this on the 31st of October 2023 about CVC putting Healthcare Global on the block. Granules India as well, some more M&A news coming in. They'll acquire a 100% stake in a Switzerland-based company, Son Chemicals, for 192 crores, and it will incorporate a wholly owned subsidiary in India to complete that acquisition. Some order wins. RailTel has won an order worth 288 crore from the East Central Railway. RVNL has emerged as the lowest bidder, or L1, for a 156 crore project from the Southwest Railways. And Vedanta has been declared the preferred bidder for Madhya Pradesh's Kohari Diamond Block. Ujjivan Small Finance Bank will be selling bad loans. Paisalo Digital has withdrawn its preferential issue of convertible warrants. And keep an eye out on NTPC Green because its 3-month lock-in period ends today. We'll take a short break, but on the other side, RBI minutes are indicating that the central bank is turning sanguine on food prices. More details on the other side. Stay tuned. Welcome back. Now, the minutes of the last monetary policy meeting have been released on Friday. Now, this was the first meeting under the new RBI Governor, Sanjay Malhotra. Now, at the meeting, the Governor made it clear that high growth momentum must be preserved while maintaining price stability. Now, he also said that food inflation outlook is turning decisively positive while voting to cut the repo rate by 25 basis points. However, the Governor has also warned about rising global uncertainties and justified the need to maintain policy stance as neutral. Now, MPC member Nagesh Kumar spoke exclusively to CNBC TV18 about the potential risks from Donald Trump's threat of reciprocal tariffs. Listen in.
There is definitely a reason to be concerned about the global situation. In any case, the world trade and investment rates, growth rates have been rather subdued. And with the new reciprocal tariff talk and all that, it is, which way it would happen is anybody's guess.
Now, along with the RBI minutes that were released on Friday, the central bank has also announced that it will inject liquidity through a $10 billion buy-sell swap. Lata is joining in to explain how this works. Lata, good morning.
Well, what does a buy-sell swap mean? What the Reserve Bank is going to do is it is going to buy $10 billion on March 4th from the market. When you buy those dollars, what is $1? 87 rupees. So you're putting in 87,000 crores of rupee liquidity into the system. Now, if you don't want to buy, you don't want to create so much of a demand for dollars by buying 10 billion. So the Reserve Bank immediately, back to back, does a sell-buy swap. That is, it sells the dollars to a counterparty with a promise to buy it back 3 years later in 2028. Now, you'll wonder why would anyone want to do that? Last time when the RBI did it, there were companies like Reliance, Bharti, who were willing to be the counterparty. They want to buy dollars and, buy some 5G equipment. 3 years later, they're ready to return the money to Reserve Bank. So that's how the system works. For the Reserve Bank and for the market, what is the net impact? No impact on dollar demand because it is bought and immediately sold. But 87,000 crores enters the system. Enough rupee liquidity. Now, why would you want to put so much money? The reasons are that the calculation of bond dealers is about 1 trillion is going to leave in the month of, remaining February and March. It will leave the system. Why will it leave? Because you and I will withdraw cash. That is one. A second reason is CRR. Every time a loan and a deposit is created, 4% of that has to be kept as cash. So that cash comes out of the system, and Reserve Bank is going to continue to intervene in the market. Every time it sells dollars to slow down the depreciation of the rupee, it's going to pull out rupees. So this 1 trillion is what the Reserve Bank is replacing in advance on March 4th. That money will enter the system. It is important to note that money will go out even on March 15th. A lot of money will go out because people will pay advance taxes. But that is short term because the government will spend it by the end of the month. They will pay salaries, contracts, end of the year. There are lots of things to pay out. That will be managed by the Reserve Bank by the daily repo that it does. the liquidity problem is expected to continue and finally really end in May, when the Reserve Bank will give a big dividend to the government. That's pure money printing. And the estimate of the market is some 2.5 to 3 lakh crore will be given as dividend. So until then, we will have these band-aids done by the Reserve Bank to resolve the liquidity deficit.
Lata, thanks a lot for that explainer. Now moving on then, former RBI Governor Shaktikanta Das, who completed a 6-year tenure at the helm of the central bank in December last year, has been appointed as the second principal secretary to the Prime Minister. Now the decision, which was taken by the Appointments Committee of the Cabinet, did not specify a tenure for Das in the new role. We'll take a short break. Up next, we get you cues from the commodities market. Manisha Gupta joins us on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, I'm looking at the crude oil prices, which did decline 0.5% in the previous week and have not been able to pick up in the Asian markets right now. Well, the U.S. inventories have risen. The oil and gas rigs have risen for a fourth straight week, and that in some sense seems to be weighing onto the markets. Add to that the fading Middle East risk premium that also seems to be off the markets right now. But there is uncertainty about the potential peace deal in Ukraine, and that is something that the markets will continue to watch out for. In the meanwhile, that exactly is the case with the many metal prices also. You have gold come off its all-time highs, while we did see prices gain 1.5% in the previous week. But the markets clearly are looking at the global trade tariffs, the decline in US dollar. While that is some supporting factor, but the all-time highs, it usually is the case that you do see some profit taking after that. We are looking at copper prices coming off at 7-month highs. Aluminum is off its 9-month highs. The only thing that I see in Asia that is holding firm is the iron ore prices trading at a 7-month highs. Apart from that, most of the energy markets, precious metals, base metals have started Asia slightly on a weaker note, on the note of profit taking.
Profit taking continuing there. Manisha, thank you so much for that update. Moving on to some international news then. Germany's federal election took place over the weekend, and exit polls show that opposition conservatives, the CDU bloc, taking the lead, garnering 28.5%, while far-right conservative party AfD came in second. Olaf Scholz, the SPD, conceded defeat, trailing the Conservative Party with a 16.4% vote in its favor. Now, opposition leader and CDU head Friedrich Merz is on track to be the next German chancellor. And on to some good news, which was the news of Sunday. The Men in Blue registered a comfortable 6-wicket win over arch rivals Pakistan in the ICC Champions Trophy's group stage game last evening in Dubai. Being put into field after losing the toss, India managed to bowl Pakistan out for 241 within their 50 overs. And the Men in Blue then made light work of the chase with a 6-wicket margin. The victory was made sweeter with Virat Kohli's return to form with his 51st ODI ton. And the batsman anchored the chase along with notable contributions from Shreyas Iyer and, of course, Shubman Gill. The result also means that host Pakistan will most likely be knocked out of the tournament unless both India and Bangladesh manage to beat New Zealand in their upcoming games. That's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for today's trade.